Yo, what's up guys? Welcome back to my channel. Another week has passed. We have finished off April 2026. We are out of our gold trade, which we'll run through. It was a partial win, but let's go through the fundamental analysis. We'll do an April recap, which is basically one trade. I am hoping our trade frequency can pick up a little bit more just to, again, we're trying to trade H4. Unfortunately, in terms of my fundamental analysis and my trade biases, they're not picking up any trades. So it is what it is. We'll continue as is. Let's just jump straight into the presentation. So sorry for my voice as well, guys. I'm a little bit sick, but this is the 27th of April to the 3rd of May. Fundamental analysis. Again, a reminder, this is not financial advice. This is purely for entertainment purposes only, and me sharing my thoughts on what I think is going on. So COT reporting, really what I was looking at for this one is, percent changes in long as well as net positions. We can see there's positions taken out of the yen and US dollar, alongside heavy shorting, change in short for the yen, and then in terms of with USD, a partial position off of the longs. With Aussie, you can see there is a tick higher into the long position. I am very bullish Aussie right now. We've got very high interest rates compared to the other regions. Also, economic data is quite good. Employment data is neutral at this point in time. So if I can get any signs of, strength in Australian dollar, I definitely am going to be longing that. In terms of the Dow Jones, we have a bit of a tick higher into the long position. We have positions taken out, however, short positions taken out as well. We have a higher net position as well, which is obviously liquidity is good for liquidity and people jumping in. For gold, we can see gold's increase in short. It was still heavily long, but starting to slow down with gold. So with this whole Trump and the war and whatnot, I really don't want to pick a side because I can get taken out. So for gold, I'm just going to stay on the sidelines. US data, we have ticked bearish for economic data. So bearish inflation, rates are the same. We had advanced GDP being worse than expected, consumer confidence still being quite high, and manufacturing ticking bearish. So I'm actually quite bearish on USD. Potentially, I might actually take an AU trade on this. So I might rework this, but let's have a look at Aussie. Aussie, we have bearish data as well. We have very strong economic data, neutral labor market, which means Aussie's in a good space right now. Again, even though it's worse than expected, you can see how high CPI is right now compared to previous and forecasts. So obviously it's bearish forecasted, but in terms of actual CPI, which we'll go through the graphs later, it's still very high, and there's still a lot of strength in Aussie, especially with high economic readings. Yen we're actually quite bullish on in terms of inflation data. Economic data ticked neutral, so from bearish to neutral. Labor market actually ticked bearish, so kind of on the fence with yen right now. There is they're showing signs of strength, but also showing obviously signs of weakness. So we're on the side for yen right now until further notice. So now, what do we mean by CPI interest rates? So obviously Aussie's interest rates still going up and staying quite high. CPI here, you can see it's generally trending up with good economic data, which means, look, the interest rate's probably going to hold for Aussie, if not go up. So I'm very bullish on Aussie. Compared to the other markets, you can see interest rates slowly coming down for USD. We did tick up for US dollar as well on the last reading, which does show a little bit more strength in that US dollar. But if we go back here, we have ticked slightly bearish in terms of economic data. So something to note, a bit less strength in the USD compared to Aussie. And then yen, we are stabilizing at 0.75 for the interest rates, which is still very, very low compared to these other two currencies. You can see the general trend on CPI. So this is interest rate, sorry, the CPI here is trending lower. Again, I think all currencies had a tick up, but you can really see the strength in Aussie in the last couple readings. So definitely bullish on Aussie. Probably not against the yen right now. Yen's showing a little bit of strength, but definitely against USD. So we might take a trade there. Economic data, we can see advance has ticked higher, which is good, but less than forecasted. Consumer confidence is, waning up as well, and core retail sales going up. AU economic data, I don't think this is updated, but yeah, it's really can't really say too much more from this, I don't think. Do we have consumer confidence here? No. We have household spendings and trades good balance. So I might need to change economic data for Aussie, but we'll leave it for now. Consumer confidence is going down for yen. Retail sales is choppy. So up and down, nothing really too much to add. Employment data, nothing new. So in terms of our table right now, we have bearish gold. Economic data is actually bullish, and the reason being is we've got bearish inflation, which is good for gold. We have bearish US economic data, which is good for gold. And we have bullish US labor market, which is bad for gold. So really net bullish, technical trends bearish, COTs bearish, ARM bearish on gold, so not trading that. US 30, if we look at the same thing, bearish inflation is good. Bearish economic data is bad, and that's probably the leading indicator, so we're just not going to touch it at all. AU, now AU, I might actually do this. This is actually bullish. I'm going to do this. Yeah, I think AU is a good trade if we have good technical data. So AU is good. UJ, neutral, leave it alone. AJ, not strong enough to go in, to be honest with you. So I'm just going to still put here. I'm not going to take an AJ trade. I just don't feel this is probably going to be a lot of intuition, I guess you could say, and it's not very trader-like. But if we go just based off fundamental analysis, it's not. We've got two bearish signals here and a bullish for labor market. We've got bullish on economic data, bearish on inflation, but still very high interest rates and CPI readings compared to the other currencies. Neutral labor market, which means we can keep interest rates higher. It's a no-brainer. With yen, we have a bit of bullishness in inflation data. I'm not gonna really touch that. There's a little bit of sign of strength on the yen. So if we jump straight into the charts, which we'll go through gold later, but let's just have a look at AU. AU, we're above the SMA. We are definitely in bullish territory. Yep, that picked up. So we can actually take a trade on this. Where I'm looking at is probably, this area here. I wouldn't look too much more. Potentially this one here as well. Right? But more than anything, I'm probably going to look here. So if I might add an alert here, pop this here. If anything stopped, going to go right here. Potential trade here, H4. Right, that is something that we can do. Let's just have a look at AJ just to have a look. So we're still above, which is good. Had a big rejection. So in theory, we'd want AJ to go I'm gonna take all this off. In theory, we want it just to go up, maybe trend back down here to where it picked up liquidity, and then potentially take a trade when economic data is good. UJ, you can see UJ had a big spike down into bearish territory. Would I consider this enough to be in a bear trend? Not yet. I'd say this is probably white until we have some push down again, and then that's where I'd be in bearish territory. US 30. US 30, we're definitely bullish. We have ticked up higher. Yeah. Yeah, this would be a valid zone here. The next zone would be here for US 30. But no indication to get in. And gold, we are definitely bearish. Let's go through my trade now for gold. So we did take a partial win on this, which was 0.59. I think it was 111 USD, which is around 200 AU. If we go on the H4, basically what I saw on the day was a pullback past the 50% retracement zone. Again, we're trading H4 zones now, so we've marked this zone here, which is a little bit of a stutter step, a bit of a stop, a pause in the action. We took a trade based off this rejection wick here on the daily, stop loss above H4 structure here. We were lucky to hold because it did go up quite high, which still held. Trailed based off this. This is still a break for H4, trailed based off that and got taken out. So look, it could blast lower. If it was up to me, in terms of the next zone I'm looking for is probably, yeah, I'd probably stay safe here. So resistance here, I'd probably want it to pick up here. It could pick up here into these little support areas here and rejection wicks. And rejection wick here as well. I'd feel more safe and more comfortable if it got up here into previous lower highs, and then take a trade shorting that there. But yeah, we had a nice little win there. If we go back to my journal to recap, we had a win on Jan, a loss in Feb, March a loss, 2 losses, a small win on April. We're in May now, which is Q2, halfway through Q2. You can see from a P&L perspective, I started with 1.9, we're at 1.69, not too shabby. I just need to increase trade frequency. That's the problem with the strategy right now. It's just too slow. I need to get at least 3 to 5 trades per month on average, which I'm not hitting. You can see it's just 1, 3, 2, 1. I'm not going to force it though. I'm going to stay with my rules. There will be a time where things start to pick up from a fundamental and technical point, but at this point in time, we're just chilling. We're on our hands. We have potential trades right now. Our system's very, very systematic. So let's just leave it there. Cool. Catch you guys on the next one.